It's another day, another news, another business, all yours for the taking with Amigas. We bring you the freshest and latest updates, helping you in your investment decisions. Now, back on track with another deep dive into the world of Filipino companies. Today, we're serving you up a cup of fresh cuts of delicious tuna in a can representing Century Pacific Food Incorporated. So sit back and enjoy a flavor-packed adventure. Century Pacific Food Incorporated is one of the largest branded food companies in the Philippines, founded by Ricardo S. Pos Sr. in 1978 as Century Canning Corporation, initially focusing on tuna canning. It has been around for 40 years, with over 200 products and 19 brands, making it a major player in the Philippine food industry. It is primarily engaged in the business of buying and selling, processing, canning, and packaging, and manufacturing all kinds of food and food products, such as but not limited to fish, seafood, and other marine products, cattle, hog, and other animal and animal products, fruits, vegetables, and other agricultural crops and produce of land, including byproducts thereof. It was incorporated on the 25th of October 2013 and went public on the 6th of May 2014 with the symbol CNPF. Over the years, it has grown bigger and bigger with acquisition activities like that of Blue Bay, Birch Tree, Home Pride, Swift, and Century Pacific Agricultural Ventures Incorporated. Undeniably, it is a brand that is well established and well known to every Filipino as a household name we always talk and hear about. But why? How did it happen? And how was it made possible? Foundational to its successes and strategic goals is its mission-vision statement. Its vision is simply echoing the importance of product quality towards addressing needs for healthier food and beverages through excellence, expertise, and trusted brands. The mission statement of CNPF highlights the reason for their existence and what they do, which is delivering products with the right quality and value for money using passionate people to develop healthier and tastier food and beverages for sustainability and growth. Their core values reinforces their vision-mission statement and its commitment to health, sustainability, and customer satisfaction. This highlights the parent company and its subsidiaries, showing that CNPF, the parent company, is a majority-owned subsidiary of Century Pacific Group Incorporated, the ultimate parent. CPGI is a corporation registered with the Philippine SEC and domiciled in the Philippines. CNPF's main office is located at Ortigas Center, Pasig City, Philippines, with a total of 13 subsidiaries, housing approximately 28.3 thousand number of employees. This presents the range of diverse and highly experienced professionals forming the leadership team behind the renowned name Century Pacific Food Incorporated, with Teodoro Po as the president and CEO. So what does CNPF offer? CNPF operates under the following product portfolios: marine, milk and emerging, meat, and corporate and others. Here are some of the brands for each category. For canned tuna products, we have the well-known brand 555. For milk, we have Birch Tree and Angel. While for meat, we have brands like Argentina. For corporate and others, we have the famous Coco Mama and others. Let us now explore the competitive landscape. Just like any other businesses, Century Pacific Food Incorporated competes with the following major industry players: Universal Robina Corporation, known for its snacks and beverages. San Miguel Foods offers products like Pure Foods hot dogs and Magnolia Chicken. RFM Corporation features brands such as Selecta Ice Cream and Fiesta Pasta. And lastly, Victoria's Milling Company specializes in sugar and allied products. Now let's take a look at CNPF's business model. The business model canvas provides a comprehensive overview of Century Pacific Foods' entire business idea or concept. These are efficient guides to discovering how to create value, how to identify consumers' needs, how to exploit external opportunities, to identify what resources are needed, how to make money, and what the projections in the short, medium, and long term for Century Pacific to align with their customers that drive their business success. To To ensure smooth business operations and sustainable growth of Century Pacific key partners, key activities, and resources, its customer relationships and channels and segments are crucial for CNPF. Century Pacific key partners play a significant role in their operations. They collaborate with raw material suppliers, retail and distribution networks, logistics and supply chain providers, government agencies, research and development teams, and sustainability and CSR to ensure quality, efficiency, and responsible business practices. In terms of key activities, they focus on product development, manufacturing and production, branding and marketing, distribution, and export market expansion to continuously innovate, maintain high-quality standards, and expand their reach globally. Also, their key resources help their business success. They capitalize a strong brand portfolio, modern production facilities, a strong distribution network, research and development teams, skilled workers, and financial capital to support sustainable growth and market leadership. With their customer relationships, they are built through brand loyalty programs, promotional campaigns, customer service and feedback, CSR, and engaging digital marketing to strengthen trust and engagement with their consumers. For channels, they ensure their products are accessible through supermarkets, groceries, convenience stores, online platforms, international distributors, and food service businesses, reaching a wide customer base locally and globally. Their customer segments include mass market consumers, health-conscious individuals, OFWs, and international markets catering to both retail and food service businesses, providing high-quality, nutritious, and affordable food products through trusted brands, sustainable sourcing, and continuous innovation, catering to diverse consumer needs in both local and global markets. The value proposition is an innovation, service, or feature intended to make a company or product attractive to customers. It is based on a review and analysis of the benefits, costs, and value that an organization can deliver to its customer. CNPF operates under a cost-driven model, maintaining low-cost competitive pricing while ensuring operational efficiency. The company's primary cost drivers include human resources and labor, food ingredients, packaging materials, marketing, operational expenses, and capital expenditures. This allows CNPF to optimize costs while delivering high-quality products to customers. Century Pacific core segments, marine and meat, are believed to have a long runway for growth by increasing consumption, fueling category growth, and strengthening their market share. They fully intend to hold the number one position and continue to reinforce their portfolio organically and inorganically. CNPF generates revenue through multiple channels, leveraging its diverse product portfolio, strong brand presence, and global reach. Consistent performance can be attributed to CNPF's strategic pillars of continuously strengthening its core business, diversifying its products, future-proofing, and prospering sustainability. Major corporate developments to achieve these strategies involve acquisition of Century Pacific Agricultural Ventures in 2015, selling 118 million CNPF shares via an accelerated overnight equity placement in 2016, securing license to Kamayan trademark for North America in 2016, and acquiring sardine maker Ligo in 2021. In 2023, CNPF reached new milestones, charting their path to resilience and growth. The company's consolidated net revenues grew by 8% in 2023, reaching 67.12 billion compared to 62.26 billion in the previous year, driven particularly by the branded segment, which grew 11% year-on-year. This outweighs the negative 4% decline of OEM export segment as a result of supply chain disruptions. The milk segment achieved a 16.8% revenue growth at 24 billion, contributing significantly to the overall performance of CNPF. To help the investors with their investment decisions, a careful financial analysis and evaluation were performed as follows. First, We analyzed the historical data through vertical and horizontal analysis, studied the business environment, and captured the growth strategy of CNPF in order to come up with our forecast assumptions. Next, we will present a summary of forecasted financial position, financial performance, and cash flow based on these assumptions. And for the most important part, we will present the valuation assumptions derived to help us compute the equity value, which will help us uncover the intrinsic price of CNPF and will be the basis for our recommendation whether to hold, buy, or sell. Major forecast assumptions to help uncover the value of CNPF are as follows. Branded segment continues to grow year on year, driven by market share gains in meat and milk segments and sustained leadership in marine products. Annual growth for the marine segment is set at 10.07%, meat segment at 11.03%, milk and emerging segment is at 21.19%, while corporate and other segment is set at 9.48%. This is based on the company's 5-year CAGR, which is higher than the market growth per segment revenue. Next, the leverage remains conservative. There is no significant increase in debt levels in the next 5 years. Average short-term loan availment will remain the same while there are no additional long-term loan availments. Strong liquidity position are maintained and sufficient cash flows are available to meet working capital and investment needs. Lastly, an 11 billion increase in capex is projected, mainly driven by the coconut expansion facility program. Presented in the next slides are the summary of the financial statements forecast over the next 5 years. Let's dive in first with CNPF's projected income statement. The company's revenue is projected to increase in an upward trend from 76 billion in 2024 to 130 billion in 2028. This is aligned with their strategic growth of increasing consumption, growing the milk segment, and unlocking market opportunities. CNPF is expected to leverage unfavorable raw material costs and operational efficiencies to achieve a gross margin of 23% year-on-year in the next 5 years. Finance cost will remain on the same level at around 400 million annually, while tax rate is set at 15.5% of net income before tax. The company is projected to achieve a net income of 11 billion by the end of 2028, a significant milestone primarily driven by the company's resilient business model and the sustained demand for value-for-money products and staples. Let's proceed with CNPF's projected balance sheet figures. Current assets will have a significant growth from 37.5 billion in 2024 to 63 billion in 2028, driven by significant increase in trade receivables and inventory as a percentage of revenue and cost of goods sold respectively. Gradual increase in non-current assets from 20 billion in 2024 to 29 billion in 2028, primarily attributable to the capex expansion strategy. Current liabilities are expected to grow from 15 billion in 2024 to 24 billion in 2028. This is due to the increase in trade payables derived as a percentage of cost of goods sold. Non-current liabilities will remain at the same level in 2023, in line with our forecast assumption. Overall, the growth in current assets outpaces the growth in current liabilities, indicating a strong liquidity position and the ability to meet short-term obligations effectively. The steady increase in non-current assets reflects ongoing investments in infrastructure and capacity expansion, which could support future revenue growth and operational efficiency. Lastly, let's see the forecasted statement of cash flows. Cash flows from operating activities are projected to grow steadily from 6.5 billion in 2024 to 8.6 billion in 2028, reflecting a strong core business performance and efficient working capital management. Cash flows from investing activities remain negative, ranging from negative 3 billion in 2024 to negative 2.8 billion in 2028. This reflects ongoing investments in long-term assets such as property, plant, and equipment to support future growth. Finally, cash flows from financing activities are consistent, ranging from negative 5.6 billion in 2026 to negative 5.8 billion in 2028. This is mainly due to debt repayments, consistent dividend payments to shareholders of 30% of previous year's net income, and a focus on reducing leverage and maintaining a healthy capital structure. Profitability, efficiency, and financial strength ratios over the next 5 years were analyzed to gain valuable insights into CNPF's potential for future growth and profitability, which are key drivers of its valuation. The company sustains its profitability through sustained revenue generation and operational performance, ensuring consistent returns over the forecast period. CNPF demonstrates strong operational efficiency as evidenced by stable working capital turnover and inventory turnover ratios, ensuring effective use of resources to generate revenue. The improving asset turnover ratio highlights better utilization of assets over time, driving growth. CNPF's financial strength is evident in its declining debt-to-assets and debt-to-equity ratios, reflecting reduced reliance on debt and a stronger equity position. The improving current ratio underscores the company's ability to meet short-term obligations, while the rising interest coverage ratio highlights its growing capacity to manage interest expenses, ensuring long-term financial stability. We'll now present the valuation assumptions used to compute the equity value of CNPF. Risk premium is set at 6.87%, which is based on Damodaran estimates as of January 2025. Risk-free rate is at 6.184%. The Philippines sovereign yield for a 5-year period as of December 2024. This is based from the website worldgovernmentbonds.com. The derived beta is at 0.389, implying that CNPF stock is less volatile than the market. Computed cost of equity is at 5.66%, while cost of debt is at 8.82%. The tax rate is estimated at 15.5%. The computed WACC of the company is equal to 8.55%. The estimated terminal growth is set at 5.77%, which is the average of Philippine GDP growth, food industry 2025 to 2029 CAGR, and the terminal growth rate used by one of the known equity research in the Philippines to value the company. Lastly, the company's probability of distress is estimated at 10%, given its healthy interest coverage ratio, conservative leverage, strong liquidity, and solid profitability metrics. Let us now proceed with CNPF's free cash flow estimate computation. The team leveraged the free cash flows to equity formula to get the cash available for distribution to equity shareholders. Total free cash flow from 2024 to 2028 amounted to 21.6 billion. This projection suggests that CNPF is well positioned to balance growth, shareholder returns, and financial stability over the forecast period. Finally, we can now compute the intrinsic value per share of CNPF. We use the corporate valuation model to determine the company's value of operations, or enterprise value. To get this amount, the present value of the free cash flows is added to the computed present value of the terminal value, discounted using the WACC. The value of operations is estimated to be at 151.8 billion. The value of non-operating assets, which includes cash and marketable securities, is valued at 5 billion, making the total value of the firm at 156.8 billion. Factoring in the 10% probability of distress of the company, the probability-adjusted value of CNPF is equal to 142.9 billion, less the value of debt at 7.7 billion. The company's equity value is at 135.2 billion. Assuming the same number of common shares of 3.5 million, CNPF's intrinsic value per share is estimated to be at 38.17 pesos. So what is the optimal investing decision based on the derived intrinsic price of CNPF? The stock price of CNPF as of January 31, 2025 is valued at 36.65, suggesting that the current price is 3.98% undervalued. This presents an opportunity for the investors to buy the stocks at a lower price. Given that CNPF has attractive fundamentals and valuations based on our analysis, it is recommended to buy their stocks. And that's where the segment ends. Stay tuned for more business insights on our next episode. This is Amigas, now signing off.